Hey guys, and welcome back to the channel. Today we're going to be going over breakout trades. These are going to be opening range breakout trades. I'm going to walk you through how I do this, but I do have to preface the video with this is not financial advice whatsoever. Trading comes with a large amount of risk, and you solely take on that risk when you decide to trade. Please don't trade with money you're not willing to lose. One other thing, if you can please subscribe to the channel, make sure you're liking my videos and dropping some comments, even if they're words of encouragement, that definitely helps my channel and lets me continue to make these videos for you guys. So let's go ahead and let's get into the breakout trade and how I work this. Okay, so first things first, I always trade New York session. It's where there is the most volume. This is how I have made a lot of money in the markets. Not saying that this is something everybody can replicate, but again, not financial advice. So when we think about breakout trades, what is a breakout trade? What does that even mean? That is essentially just breaking out to the upside of the bottom side of a key area. It's very simple. You don't have to overcomplicate it, and you're looking for very specific things to happen. There are several indicators on my chart, as you can see as well, that we will get into in later videos to help you understand and have extra confluence to be able to take trades. But for the purpose of today's video, we're just strictly going to go over breakouts. So when I'm coming in to New York session and I am looking at previous market data, I'm looking for highs and lows in areas of interest that make sense to me, where price could potentially go to or bounce from, right? So when I'm looking at these areas, I'm looking at lows and highs, like I said, and I'm gonna come in here and I'm going to mark them out. So I have all of these key areas marked and I'm looking at them pre-market. So this is always a pre-market markup. And then I am coming and drawing trend lines as well. So consolidation points, trend lines, it can start to get really messy really quick, but we don't know any of this has happened in New York, right? We're just looking at these consolidation points, even if we're looking at just the most recent price action. All we're looking for is price to tell us either it's going to break above and continue above either this little level we have drawn here or above the zone. What do we see it immediately do at open? It comes right up, wicks this level, and then starts to sell off. So what are the confluences here for me to want to take a short position? Okay, let's dive into this and break this down. So I would be willing to go short after it broke either my trend line or started to break down below my level of consolidation that I have set. Where's my take profit though? How do I know, and how does that make sense? Well, we see this level here, right? And what else is this telling us? This is where that trend, the trend line, started. So this could be our take profit 1, which it definitely came to, and then take profit 2, right? And coming on charts and being able to look at this, of course, drawing this out like this, hindsight, always looks more beautiful. So what do we need to do to really make sense of this? We need to come down to a 1 minute and understand that on a 5-minute chart, just because this looks very, very smooth and it's pushing all the way down, does that mean that's what's happening inside of these 5-minute candles? No, that is one thing to fully understand about these trades whenever you're trading, is to understand that we're looking for specific things to happen. So we can see ultimately that we start to get that break below right here. Here's our body. This is where we entered. We see the break below on a 1 minute on NQ. So we have a trend line break. Could we have gotten in at the trend line break? If your risk tolerance allows it, absolutely, right? We have the trend line break. We see these wicks. We don't really care too much about drawdown because our conviction is strong with the idea that it's going to sell off, right? So could this potentially have wicked you out though? Again, doing your due diligence and back testing these areas and understanding, am I okay with a 30-point drawdown? Even though it wicked way up here, if you have a 20-point stop, you just got stopped out, right? Are you trading with that big of a stop? Those are things to ask yourself for trend line breaks. We'll go through several examples of this, but we can see we've dropped down into take profit 1. We kind of bounce here, and then we come and go into take profit 2. So understanding who you are also as a trader. Are you somebody who maybe you took the trade here, we see the body pushing below, would you panic close this if you saw, let's just run numbers here hypothetically, if you, let's just say you had a 40-point move, right? And we know that one full-size contract is $20. So would you be okay with it going down in profit $800 and then all of a sudden coming all the way back up to only having $200 or so in profit, but then having it return back down, right? So this is the difference between TP1 and TP2, right? Is your mentality when it comes to trading. So let's go look at another example. Again, we're going to go back to our 5-minute, and these are just breakout trades. This is one trade a day, one breakout, and you're done for the day. You come back the next day and you do it again. Okay? So what do we see this day? Well, we have certain levels, right? We have our low, and then we have these consolidation highs that are starting. We can come over here, consolidation high. Could we mark in here? Yeah, it's a consolidation, right? Looking at all these consolidations, okay. Where do we have a trend? Okay, here's our trend. What do we see happen here on the 5? Immediately a push up. Okay, so what would our first indication be? We would then want to drop to what? A 1-minute, right? So we have our trend line. We've marked all these areas of interest. We know that price potentially could have a reaction. We could mark this level too, because it's been a consolidation point. We look left. It's still a consolidation point. Could we bring it down slightly? Yeah, so it makes sense to touch everything. Yes. Okay. This is where our trend started. Now we're going to come down. Let's select a bar so we don't get out of place here. And we're going to go to our 1-minute. And we're going to say, okay, I'm waiting for price to do what? Either break my trend line or break this level down here. Could you have shorted the opening candle? Yes, you can. Have I done that? Yes. How many points is that? That's a pretty significant candle, right? That's 70 points in 1 minute. Okay, but we're looking for the reality of this to be able to take trades and not give ourselves heart attacks. So what do we see happen here? Trendline break. We'd be interested in taking a long position because say you hesitated, say you missed this, it bounced here. Now you're just waiting. You're being patient, you're waiting. This again happened at 6:37. Please remember I am Pacific Standard Time. So when I'm looking at my charts, you're looking at my charts, this is all Pacific Standard Time. So why do we have this first level? Remember on our 5-minute, this is essentially where trend started. Could we bring this up a little bit higher to where the trend actually started? Yeah. Do we hit it? Yes. But could you be on the safe side, right? And go to 50 points? Absolutely, right? It's at your discretion. This is your trading account. This is your trading journey. You have to find what works for you and what patterns you see in the market. Okay, so what do we see? The breakout, it pushes up. Do we hit target 2? We get close to it, but we come all the way back down. So again, this is a question you have to ask yourself as a trader. Am I okay with watching P&L? And that's why they say, like, don't watch your P&L. Because you're up 100 points. That's a pretty significant move. That's $2,000 with one contract, right? And then it drops all the way back down to 27 points. Okay? So you just went from $2,000 back down to around what, $600? And then it finally hits all the way up for 140 points. So you're in that now $2,800. So are you somebody who can withstand that deep of a pullback and then wait for the continuation? Or are you somebody who's going to trail and then take what the market gives you in your first breakout trade? Because remember, the breakout trade, you're one trade a day and you're done. There's no other trades needed. This is your trade, you're done. Okay, let's go back to our 5-minute and let's look at another example. Let's clear everything off of the chart. Okay, let's look at consolidation points here. Remember, we don't know what's going to happen at New York. The only thing we know right now is what's happened during London session and Asian session. So we're looking at consolidation points. We could come over here and we could say, okay, well, if price buys today, at least I know potentially, where we might be going, because I'm going to come in here and mark all these areas of interest. Okay. So then what can we see happen? Where do we have a trend? Here's our trend. We see a beautiful trend happen. We're going to come down to our 1 minute. Let's select our bar so we don't get lost. If you're back testing, this is a great way to do it. And then you're looking for where potentially the trend happened. So let's not get ahead of ourselves. Let's go down to our 1 minute. And now let's make sense of this. So if I was trading this, would I have went short? I would have went short. Why did I go short? Because I would be looking for a buy above trend or above this level or below this level, this consolidation point. So is my short still valid? Yeah. Did it go to an area where I potentially should have had marked as an area of interest? Yes. Okay, so is it valid in the big scheme of things to short this out? Yeah, I believe so, because I feel comfortable hitting TP1 for 42 points. That's still $800, right? Now, what's on the other side of this? Maybe I didn't feel comfortable. Maybe I hesitated. Maybe I was like, no. Maybe there's news, right? We're checking news all the time. Maybe there's something telling me that I don't feel confident in the short, or maybe I missed it and it's bouncing here. So what is my next plan of action for my one trade a day, right? That's our focus here, is one trade a day. The long, right? Because we broke trend. So I'd come in, I would take my long position, and then I would target either where the trend began. So where the trend began, we can mark a little level here, and we could look left and we could see that this is a macro level. Why do I say macro level? Because of course we are on a 1 minute time frame. So we're on a 1 minute time frame. We could go to from trend break, depending on where you get in, right? Let's just be a little more realistic. Say it broke trend, you hesitated, but then you got in, and you're going to take it to that first where trend began, that first TP for you. So that's going to be 40 points. That's another $800 if you took two, right? But we're only talking about taking one trade. One trade a day, $800, you're in, you're out. Could you have held to TP2? Yes. 100 points, $2,000. But what's the caveat here? Remembering that what? If you're up 60 points, right? Or maybe you're up that 70 points, you're watching your P&L, and then all of a sudden it comes down from, let's see where the high was. So 80 points. And then we come all the way back down to 30 points. Are you okay from it going 70 to 30? Like, those are questions to ask yourself again. And then the full reward, obviously 100 points. Again, if you didn't stop here and it came all the way back down from 200 or 120 points back down to 40 points, right? These are things to ask yourself when you're trading actively. So is it the TP1? Is it the TP2? And again, this is where backtesting comes in. This is where you say, okay, well, you know what? With this particular strategy, I consistently see it hit TP1 and I'm good with that. And I'm going to go about my day and I'm going to come back tomorrow and I'm going to do it again. So let's remove our drawings and let's go look at another breakout trade. Let's find one that maybe didn't work very well, because it's not going to be beautiful every day. It just is not. There's going to be days where it trips you up, it fakes you out, and it will ruin your day. That's the reality of trading. But one thing to reframe is to always ask yourself, okay, well, what did that teach me? What is the lesson here that it has taught me? Did it teach me that I need to be more patient? Did it teach me that I need to, what is it teaching you? So this would potentially be a good day. Already I know it's a buy, but let's just go through it and understand this, because this would be a day where you could tell yourself that, you know what, those multiple trades weren't worth it, right? So the breakout, let's try to understand this. So we have a level here, we have a level here, and we have a level here. If you guys at any point need clarification on anything, drop it in the comments. I love answering your guys' comments and helping in any way. Obviously, cannot give you financial advice, but I love to help. So drop it in the comments. Don't be scared. There's no stupid questions ever. So just let me know. Okay. So we have like our areas where price could potentially go, right? We could say we mark these because we're like, okay, well, what if it sells off? Obviously, this was a news day. That's a news candle. I do remember this day, and I remember taking the buy and moving on with my day. Okay, so we'll come down to our 1 minute. And what do we see? Right? What is it showing us immediately? A long position. Did this happen very quickly? Yes. Is this something that would be a little bit hard to capitalize on? Potentially, yes. I'm not going to sugarcoat it. These are hard to catch sometimes when it's that first 1 minute candle or that first 6:30 candle and then immediately shoots back down. So could you have waited and gotten the same result? Because why would we potentially get the same result, right? Looking at this chart, why would we get the same result? Because we never broke below this significant level here, right? We never broke below it. We just went and broke trend again. So even if you hesitated here and you were like, no, I'm not trading the opening range candle, I'm just not doing it, this would be where you could be like, okay, now it's, 1, 2, 3 minutes into market open. I feel comfortable taking the buy now. 46 points, right? Did we get above it for another take profit? Well, let's go look. Where did trend start, right? So always looking where the trend started and then going and look. This is a 1 minute, so these are going to be macro levels. Remember that. And we're going to look where prices come multiple times. Okay, let's go back and let's look. Did we hit TP2? Yes, but this is that trade, right? These candles. But remember, where do you sit? Are you okay with a 50 point or 60 point move, right? 60 points is very significant. That's a good amount of money. There's nothing wrong with that, right? But what do we hit now? 90 points, right? But at telling yourself, okay, am I okay with it coming back to literally break even and then going back up? So understanding that aspect of it. Let's do an example over on YM. So let's go look at the same kind of scenarios that we already look at with NQ, and let's put those same ideas to the test with a trade on NQ, or excuse me, YM. So when we think about YM and we think about, right, we don't know anything that happened in New York. We're looking at Asian session, London session, and previous day session. We're only looking at consolidation points. People call these pivot points. People call these support and resistance. People call them a lot of different things. It's just where prices had reactions. It's where prices come multiple times. You start to see patterns in the market. You start to see behaviors repeat themselves, right? The only thing standing in the way of you being successful is potentially your psychology. Okay, so what do we see here? We can see that there is a large trend line playing out here. So we have 1 touch, 2 touch, 3 touch. Okay. Now we could say, let's select a bar and let's go down and let's look at this and make sense of it. Let's go down to a 1 minute. And could we have levels marked under here? I didn't mark them, but we do need to have them. So we have this level marked here as well. What do we see happen at open? So we have our first level of consolidation, and we have that second level, which is a little bit tighter. But what do we see? Here's our trend line. It's a little bit hard to see. Maybe let's change the color of this. I just realized that's kind of hard to see through London. So let's just make it white. Okay. So we immediately start to see that price is pumping. So could you have waited that first 1 minute or into the opening? Yeah, you could have. And then you could have gotten into the long position, or you could have just taken it right out of open. So you could have taken it from here or here and still had a pretty good return. So target 1, 28 points, target 2, 60, target 3, 96 points. Did it keep going? Yes, but it wicked. And these can happen quick when there are wicks within the charts. So pay attention to that when you're back testing as well, if you are wanting to back test this strategy. So let's go ahead, remove our drawings. Let's go back and let's look at this particular trade. Okay, what do we see right off the bat? Trend line, right? So this trend line, you could adjust it to hit here if you chose to, right? None of these have to be perfect. They just have to have multiple touches. So 1, 2, 3, 4 touches. Okay, where are areas of interest, right? If we decide to sell off today, because we don't know what's going to happen during New York, right? We don't have any idea, potentially, really heavily dependent on news that day or kind of what the market's been doing. But we can come in and we can start marking areas if it buys or it sells, right? We're always looking for where could this go and why is it going to go there? Okay. Scrolling left, does it make sense across the board? Yeah, it does. Okay. So now I'm going to select our bar. We're going to drop down to a 1 minute and we're going to look at price at open and we're going to make our decision, right? Are we buying or are we selling? Well, we can start to see that even before market open, we're starting to see this break and then we see it break a consolidation point as well. We know that trend started here. So if we were just going off a trend where it started, it's very close to an area where prices had a reaction previously. So that would be our potential take profit 1. So we would say long position, and that is 90 points. Could we go to TP2? 163 points. Yes. But again, remembering that if it wicks all the way down here, are you potentially going to panic close? Or are you going to hold out for TP2, right? Making, even if you have to get a pen and paper out and making yourself a list, right? How many times does it hit TP2? What is the back testing, right? And the way you see it, the way you would trade it, and understanding how many times does it hit TP1 and how many times does it hit TP2? Should I be waiting for TP2 on a breakout trade? Right? Key component there, breakout trade. So what do we see here? We see a trend line. We have this level. This was a news day. Oops. This is probably NFP. Maybe not. It's a Tuesday. Okay, so let's just go in here. I forget what news we had that day. And let's mark levels because remember, we don't know what's happening during New York. Where could we see price going? Okay, we have this level, we have this level, and we have levels below. Okay, what happens immediately at open? We short out, right? Even on a 5 minute. Do we always need to go down to a 1 minute? You don't have to, right? You don't have to do anything. It's whatever makes sense to you. So let's just do it though. Let's go down to a 1 minute and let's try to understand this and say, okay, yeah, this feels good to me. I like how this looks. Could you have said, oh, I see like a macro level here. What's our macro level? a 1 minute level, right? Do we scroll out and see that, oh yeah, it is actually a pretty significant level? You know what? I don't want to trade that opening range. I want to wait and see if this breaks right here, holds below, right? Holds this level to a degree. So either way, these are both valid, right? It's your breakout trade. So either you're taking the break here and you're hitting maybe the target 1 for 40, target 2, 80, target 3, 175. And there's going to be days where it's very smooth and it just goes down to targets and you don't have to worry about anything else, it coming back on you or watching your P&L suffer significantly, but then it hits, keeps hitting. You'll see these moves some days, remembering that that's not going to happen every day. But let's say you waited, right? Let's say you waited and you were like, no, I want to see it drop down below. Did we still hit all our take profits? Yeah, it's the same idea. It's just sometimes more patience is required, sometimes building out yourself as a trader and building the muscle to be able to execute, right? Execution is key when it comes to trading breakouts in this manner. So we can go to another 5 minute and let's look at something else. And then we're going to switch over to gold and silver and we're going to look at the same kind of ideas. So this day we can already start to see, once you start looking at certain strategies, you're going to want to find a strategy that makes sense to who you are, that makes sense to how you want to operate within the market and what you can withstand as a person. The more you understand who you are, the easier trading will become for you, because trading, it's essentially a mirror, right? This is a mirror of who you are. So if you're somebody who struggles with execution and you're hesitant or you need multiple significance of confluences and things like that, breakout trades may not be for you, right? So understanding who you are, but if this is something that works for you, resonates with you, do your due diligence, right? Come in here and backtest these. Make sure this makes sense, right? Very significant push down just within 2 to 3 minutes. Do we have another macro level we could potentially mark? I don't know if it'll show it to us. Oh, it's there. So we're going to go over gold and silver next with the same ideas in mind. Again, we're looking for places where price stalled. So let's go back and let's see, did we hit that low? Yeah, we did. Okay, so all I'm doing is I'm looking for places where price has stalled out, where it could potentially come to again. 200 points. Okay, let's go over to gold and silver and let's just kind of align those same principles of kind of what we're looking at. So we're going to remove the drawings. These are, again, very similar to what we were just looking at. The same idea. We're marking trend lines. And then we are looking at consolidation points, right? We're looking for key levels, support resistance, pivot points, whatever you'd like to call them. They're all the same thing to me. And let's look at this level. Let's look here. I'm going to mark this level. We do have a gap, which it gapped pretty significantly. Okay, we'll come down here and then down here. Below that, we could potentially mark, you can have these zones marked up and make sure, like, you can mark these up Monday, right? And throughout the week, they'll keep retesting. And then if you need to delete one, right? Make sure it just makes sense. So obviously this was a very significant day for gold, even with it just being a breakout trade. So again, it's going to be those same parameters, right? It's going to be either that trend line break, which we see here. I have this backwards, sorry. Short position, okay? And then it's going to, that's a 200 point move. Is this typical? No. We need to go find one that's a little bit more realistic. Yes, gold and silver have been extremely volatile. There is a lot going on with them currently. So all-time highs for just about both of them, if not everything in the market. So keeping that in mind, let's look at something that's a little bit more realistic to what the potential for breakout for gold is. Okay, so let's take this one into account. Remember, we're opening our eyes up to seeing these trends. Bear flag, bull flag, whatever you want to call them. Again, still the same thing, right? Still the same thing. This is pre-market, but then you can see the flag present itself again. So how do you make sense of this, right? We don't need this here. It's confusing. Sorry. So let's go ahead and let's mark our consolidation points. We were really, really flat during London session. Not much happened. So when we come into New York session and we see that there's not really anything going on per se, how do we make sense of that, right? And gold is a little bit more tricky sometimes for breakout. So when we think about this, and we know we see this little flag playing here, and we know that that trend is sitting there, and we're like, okay, but what do we see at open? We see it push up, kind of dance around, nothing really happens, and then we start to get the break. So we have the trend line break, and then we also have a level break. So could you go short here? Yes. Is it more realistic to get anywhere from 8 to 10 points out of the market? Yes. Was 200 points something that is crazy for gold? Yes, right? So there's that idea, okay? Could it still play even further down? I think we retraced back up. Okay, there it went. So opportunity for gold, if you're doing one and done, it's gonna be smaller potentially depending on the day, right? So again, we can see that this immediately was a short position. We can come back, select our bar, and we can go down to our 1 minute and we can see what that transpired as. And we can clearly see that that is our short position, right? So we would go in here, we would go short, and we would capture that movement. It is, yes, a smaller movement for breakout. Again, keeping that in mind. But with the way gold moves, we know that one full-size contract moves at $100 per point, as where a micro contract moves at $10 per point. Okay, so let's look at this, for instance, here. Okay, we see this trend line happening here. What else do we see here? Because this sometimes can confuse people, because you're also seeing this, right? So could this be more than one trade? This is actually 100% up to you, but we'll do another video strictly on trend lines and how I utilize them to take multiple trades. Again, for the purpose of this video, it's just for breakouts, so come back for the trend line video. Make sure you guys are subscribed, make sure you're liking the video, and make sure you're dropping comments or asking questions, even if the comment is words of encouragement. So let's go ahead and put on our long position. And again, you guys can see that anywhere from, this was 7 points all the way up into like 12 points. So with this, again, remembering if this is $100 per point, you just made $1,200, right? If this is a micro contract, one micro, you made $120. So, or if, again, how we viewed NQ and YM, if you're not okay with this coming back down on you to potentially break even, where do your parameters lie? What are your rules for yourself? Is it to get out at the trade or at the reversal, right? There's a potential reversal right there. Or is it to take it all the way to where trend began, right? And gold is notorious for going where trend started. Okay, let's look at this trade. So again, we have a very steep trend line happening here. And we see this happen before market even opens, it breaks out. So at market open, what is our anticipation? That potentially we could break out here. Is this a little bit harder to trade utilizing the trend line this way, or could you bring this up and make it less steep? It's either or, right? Make it make sense to what you're looking at and what you're looking for. So we have this area of consolidation, we have this area of consolidation, and we have this area. Just with these key little areas and not marking too much out, let's see what we have here. So let's go and select our bar. Let's go down to our 1 minute so we can really see kind of what price actually did and if it makes sense to what we're trying to do. So again, our trend line, keeping it kind of cohesive and not as steep, and then taking our long position. So right here at market open, there it is. You're like, okay, I feel comfortable. I'm going to go for it. I'm targeting, you know, maybe 5 to 8 points. We hit 7, 6 to 7, depending on where you got in at. As far as drawdown for this, right? Drawdown's going to be tricky with this, but this drawdown's 4 points. So is it a 1-to-1? Is it a 2-to-1? Like, what are you willing to risk to make, right? And we need to talk about adding in contracts. That will also be in another video, but now I want to transition over to silver and show you the same idea of the breakout one and done trade idea. So let's scroll back here to where it wasn't as volatile potentially. Been pretty volatile. Okay, so the same principles, right? We can already see this is a beautiful selling position. Here is our trend line. We have the break at New York Open and it sells off. Short position, again, doing your due diligence, making sure you understand exactly how silver moves, what the point values are. If you guys need a specific point value video made, let me know down in the comments and we can go over that. But this pushes down all the way to over $1. So yes, we had it wick all the way back up. So this is going to follow along those same principles of, are you okay with, and at 50 cents, just for reference, if you're trading one full size contract, that's $2,500. So at 50 cents and it pushes down to 60 cents and then, or well, it pushed down honestly to like 90 cents, which is close to $5,000. So are you okay with it pushing all the way back up to like 30 to 40 cents? Does this go back to 30? So you were almost at $5,000 and then it went to $1,500, right? This is where that psychology comes in to understand, like, what are you willing to do and how are you willing to do it? What does your psychology say about you? Remembering that your mirror, right? This is your mirror. Are you somebody that can withstand that and not panic close it? And then I see a lot of people jump back in and then it does something like, so we see it kind of has the green candle and it wicks out and you're like, oh, I'm going to get back in. You get back in and it comes all the way up here and you panic again and now you're red, right? So understanding, that's why I keep saying that, understanding who you are as a trader, okay? How did we know though? We've skipped that part. We got to look at consolidation points, right? We got to look at areas of interest, where price has come multiple times before, looking left, making sure this makes sense. So now let's go look at our trade. Oops. Let me put that back. Okay. TP1 hit, but TP2 got real close. So again, this is if you want to trade silver, start coming in here, making a list of rules for yourself that make sense to what you're doing. And say, okay, well, TP2 maybe doesn't get fully hit every time. Maybe my take profit is above TP2, right? So let's look at this now. And let's look at our consolidation points. We know this is a significant consolidation. We know down here, consolidation. Could we potentially mark this as well? Yeah. Okay, so now we come into market open. Okay, this is really sloppy how this looks, but you could say here's a trend line and it shorted out. Could you take the short position? That's your one and done. You're done for the day. And maybe you went to 30 cents, which is $1,500. Boom, done. Okay. Maybe you hesitated. How do you take a breakout trade if you hesitated, right? Where does that come into play? We actually need to go down to a 1 minute. And this is where you would be able to utilize a different strategy and be able to pivot. So there's multiple ways to trade, obviously. This was our short position. Let me put it back here. Here's our short position, TP1, TP2. 30-ish cents, depending on where your entry is, right? Because here's that first candle, here's the second candle, it's pushing. Maybe you got in late and you're still right around the 30 cents, right? That's also why getting stuck on dollar value amounts, that can be tough. So how else can you mitigate this? Say that you had hesitated, you're like, I'm really not that sure, like I feel I don't know, right? You go back to your 2-minute and you kind of look at this. Where else is this kind of flagging? Like, can you see another trend line / flag? Yeah, here. Is it above a zone? Yes. Could we buy from here? Yes, you could have taken the buy up, but that kind of violates the entire breakout trade from opening. Like I said, we will dive into that into another video, but let's go ahead and let's look at another example of a breakout trade. Okay, here we are, and we have consolidation points, right? This is the first thing we're looking at. We're looking at these consolidation points as areas where price could potentially go, because again, we don't know what's happening in New York yet. We don't know if price is going to jump. We don't know if it's going to sell. We have no idea. So we have these areas of interest. Could we continue up with consolidation points? Sure, right? Okay, what else do we see here? We have a trend line, right? Does this break pre-market? Well, I guess that's a 630 candle. Let's go ahead and let's select the bar and let's go down to our 1 minute and let's make sense of it. Okay, what do we see immediately happen? We see trend line break. What are we looking for? Potentially, we're looking for start of trend, right? We're always looking for that start of trend, and we see it happen. Okay, so we would go long here. So come in here, we'll type in our long position. Target 1, though, is going to be around the 20 cents. So 20 cents is $1,000. And then if we go to TP2, that's going to be around that 50 cent mark, which is the $2,500. And then TP3 is going to be around the 65 cents. So again, this is the breakout, right? This is just trading the breakout. And with silver, sometimes you don't always see it retrace super hard. There potentially could be, but remembering that if we're already at 20 cents and it's, $1,000, but then it comes back down to like 10 cents, and we're like, okay, we just went from $1,000 down to 500. Is that something easier to stomach and then see it push up, right? So let's go over one more example and see this. Let's scroll back to potentially when price was maybe a little bit calmer, just so you have like reference. Because it used to be unusual to see silver move an entire dollar in one day. That's not unusual anymore. Okay. This might be a good day. No, that's clearly a buy. So the more you do this, again, with any strategy, the more you'll be able to start to see these very clearly and understand, okay, I know what I'm looking for. I know that there's consolidation points here. I know that prices come here multiple times. I know that if we sell off, I have areas to the bottom side. Now, if I buy, I have areas to the upside. Okay, and what do? Tap right into it, right? So again, you could come down and you can use your 1 minute, but I do like the 2 minute for metals. So let's go ahead, select our bar. Let's come down to our 1 minute. I would say 2 minutes on gold more than silver. Silver respects a 1 minute a little bit more without being as indecisive. So long position, Target 1, 25 cents. Target 2, 45 cents. Okay, so that is the breakout strategy. Again, this can be used across absolutely everything. We've been talking a little bit more about BTC. If you guys are interested in doing a little bit more with crypto, primarily I am a futures trader and have been a futures trader for the past 6 years. But if you guys want to get into talking about BTC, it's going to be those same exact principles. Can you still see it on a 1 minute? Yes. Is it just more noisy? Yes, right? But there's the breakout trade. Do we see it here? This potentially false push to the downside and then rallied. So again, it's figuring out what market you want to be in and how that looks. So I'll leave this here. If you guys have questions, drop it down in the comments for me. I'm so glad you're here. Make sure you are liking, following, subscribing, doing all the things, and dropping comments, and I will see you guys in the next video.